gave us $1,000 a month between the two of us instead of $300 between the two of us, and I like that number a lot better.
Okay, hi guys, here we are again, Viviana.
And I'm Amy.
And today we're going to be talking about debt. And debt is something that isn't very good that people have.
In our last video, you can see everything that we have.
All of our expenses.
That we expend on. And we do have a $200 credit card debt, and we have a card payment. But we share one card payment between the two of us.
Yeah.
And that didn't sound horrible to me.
No, because we were able to afford it, and all of our expenses were being paid, and we were still getting money at the end of the month. But something was just not clicking. We would go back to the numbers and then come out with our estimated mortgage amount that we could afford. And we were like, something's not right, because we were talking to other people that would qualify for much more and that were able to afford a bigger mortgage payment.
Just like us, we got qualified for a lot more, and yet
we didn't see how we could pay that amount. And
monthly,
yeah. And I think what actually got me, I don't know what it was, but one of my coworkers made a comment. She's like, pay off all your debt. That's going to increase the amount that you can put aside towards a mortgage. Like, let's say you have a $200 monthly payment. If you pay that off and you don't have a monthly payment of $200 for your credit card debt, you can use those $200 for your mortgage. So it's basically, I guess, rearranging your money, you would say.
This is her coworker that has a house, so we kind of trust her a little bit.
Yeah, and at first I was like, okay, but I'll pay it off in a year. That shouldn't be too much of an issue.
Yeah, that's the thing. You pay off your card in a year. You pay off your car in a year. It's fine. It doesn't sound horrible.
Yeah, and when we actually got pre-approved for our loan, the bank said you need to pay off your car and you need to pay off your credit card debt to me. And the total of amount that I needed to pay off was $1,500 for my car and then $2,500 for my credit card debt. I come to find out, 9 months into it, I've been charged $400 for those 9 months in interest.
That's a car payment.
That's one car payment. It might not seem like a lot, but to me that was a lot. And from going to paying off my debt every month and seeing no interest, I mean, that was pretty great. And then having the slammed $400 without even me knowing. Like, I didn't know, and I felt so dumb that I didn't know I was getting charged this interest. I was like, no, how am I going to be paying interest when I can just pay it off? My car payment was a little bit different because I got a really good deal on it. So the interest on it was like very insignificant. It was like $1.50 a month, and to me that didn't make much of a difference.
You got like a 0.8 interest rate, right? And you also didn't go out and buy a BMW or a Lexus. She just went out and got a Honda Civic.
I finally made that decision of paying it all off because I had the money just sitting in my savings. But I was like, why would it be sitting in my savings when I can just pay off the debt and not pay any interest in it?
And so technically, we used our savings down payment money.
Yeah.
Because the savings is for a house. And I was so against touching our savings because I know buying a house is expensive and all these things come up and fees on top of fees on top of little fees and more fees. So I wanted as much money as humanly possible. But then Vivi showed me math.
Yeah. And I was like...
I still told you no. It took me a while to get convinced, and some subscribers also told us to pay off our debts, and people on Facebook and Instagram, a bunch of people have told us to pay off our debts. But I was thinking I need as much money as humanly possible, because we're still in positive monthly income. We're not in negatives. we're not in anything. It's like, it doesn't matter. But
little did we know that it does make a difference.
And here's the math as to what Vivi showed me.
Okay, so initially what we were able to afford was about $1,700 for rent. And our mortgage needed to equal just about $1,700 because we were thinking, this is what we can afford right now. This is what we can afford with our mortgage, considering all of our expenses. So all of our expenses totaled up to about $2,132 for each. We'll just leave it at that. And taking out, let's say $320 and $200, this is for my car. This would be for Discover. That would give me $520 more a month to put towards this. So that automatically would increase the amount that we could afford for our mortgage. At first we didn't see that because we're like, okay, it just has to be the same. But after paying off this and this, you have this cushion to be able to put that for your mortgage. Okay, so with all the numbers calculated, with all the debts paid, we were able to come up with $2,000 for our mortgage payment. And with this, we were gonna be left with $300 as cushion, which meant it was for emergency, savings, etc. But we didn't want just those $300, so we needed a lot more. And I think currently we're able to save $1,000 just by paying off the debts. So our total savings that we had was $23,000 together. And my car was $1,500 to pay off. My Discover was $2,500, and Amy's Discover / credit card, I'm not sure where it came from, was $1,000. That left us with $18,000 left as savings for a down payment. So this was still a good amount of money to buy a property, but that would have been ideal. But since we were able to get rid of all of our debt, that made it possible for us to afford a $2,000 mortgage and still have a cushion for our monthly income.
So the $300 a month would have been after paying bills, after paying groceries, after paying gas, cell phone, rents, Wi-Fi, everything. We would be left over with $300. And this is us being conservative of not going out, not hanging out with friends, no emergencies, no flat tires, no nothing. That would be $300 right there. And I don't think either of us are really okay with just having $300 between two of us every single month. So, paying off the car and paying off the credit cards and paying off a few things monthly wise gave us $1,000 a month between the two of us instead of $300 between the two of us, and I like that number a lot better. And because we like $1,000 every single month to be able to rely on something in case something does happen is why we decided to remove it from our savings. And now we're gonna have to try to pay everything off with $18,000. Now this might mean that we have to ask the sellers to pay closing costs or ask the lender for a grant or something, but we're probably going to cut it close now.